Bitcoin all-time high 111k. Why? For real? It's finally happened. Bitcoin has broken its all-time high, blasting through 111,000 USD. Woo! This isn't just a number, it's history in the making. But before we get caught in the hype, we need to pause. Because now the real question begins. Can this rally actually continue? Is it sustainable? Or is this just a final spark before the fire cools off? If you're looking for real answers, hit that like button and subscribe. This channel isn't about price headlines, we focus on the big picture. Macro trends, whale behavior, and the real signals that move these markets. I'm Neil, and today we are breaking down the truth behind these breakouts. What the heat maps and liquidation zones are really showing. The key macro drivers behind Bitcoin's move. Whale behavior and ETF flows you need to know. And finally, is this a true breakout or just another bull trap in disguise? This video will give you the clearest clues on where the market is headed next. Let's dive in. Before anything, we must take a look at the heat map and what it is telling us. Bitcoin started this session at 110.4k and initially moved higher, reaching 111.8k before being rejected. Since then, price has been trapped in a narrow corridor with visible liquidation zones on both sides. At the moment, Bitcoin is moving between 110.7k and 111.9k, currently trading around 111.5k at the time of recording this video. There's a heavy resistance selling at 111.9k, with lighter resistance extending all the way up to 114k. On the downside, support sits at 109.7k and 109.4k, with lighter zones scattered between 110.7k and 108.1k. The conclusion? So right now, Bitcoin is just hanging out right under that 112 selling, consolidating in a tight range. Buyers are stepping in, but the sell wall is still there. If the whales keep absorbing that pressure, we could break out cleanly. But if 112k holds, we might see a short-term pullback. Either way, the next move could set the tone for the rest of the week. And now, let us zoom in on what the whales are doing, because, that's what really is driving this move. When looking at the CVD material, there was a strong selling wall during the breakout above 110k. But as price climbed steadily, that wall was gradually absorbed. Now, we are seeing a new sell wall forming at 112k, suggesting another area of resistance. Now, let us talk about the whales. The brown line, which represents 1 million to 10 million USD orders, shows a steady rise, a clear accumulation from larger players. The green line, 100k to 1 million, and purple line, 10k to 100k, also trend sharply upward after May 20th, signaling aggressive spot buying by whales as Bitcoin moved into the 110k and 112k range. Meanwhile, retail-sized orders, the orange line, 1k to 10k, and the red line, $100 to 1k, they remain flat or in a mild decline. The red line is hesitant, taking a wait-and-see approach, while smaller retail traders are showing little conviction. Shrimps are not driving this move. The CVD for all orders, in blue, shows a strong upward slope, confirming that net buying pressure is coming from the larger brackets. This rally is being led by whales. So, the takeaway here? Whales are doing the heavy lifting. The CVD lines are rising with price, and that's key. It tells us this rally isn't just noise or retail FOMO. It's driven by real spot demand from large players. As long as that trend holds, momentum is on the bull side. Let us put things in perspective with the macro environment. Alright, now let us zoom out and look at the bigger picture, the macro environment that is shaping this Bitcoin rally. We've had a few major forces pushing markets higher lately. The central bank policies, the Fed and other major central banks have been signaling a slower pace of rate hikes. This easing of monetary tightening has been a major tailwind for risk assets, and including Bitcoin. Then, the inflation trends. Inflation is showing signs of cooling in some regions, which eases fears of aggressive tightening and supports a bullish mood. Then the geopolitical tensions. And by that I mean that trade tensions between the US and China have cooled recently. This easing in geopolitical risk has helped lift investor confidence across global markets. Then, the liquidity conditions. Global liquidity is improving with more capital available for risk assets, and that's huge, because Bitcoin tends to thrive in a world of easy money and abundant liquidity. It makes investors more willing to take on risk, if you know what I mean. ETF flows. And let us not forget the ETFs. Spot Bitcoin ETFs and now even Ethereum spot ETFs are seeing strong net inflows. That means institutional investors are actively playing into these products, which puts real spot demand under the price. It is not just speculation, it is actual buy pressure from big money, helping to reinforce this rally. That said, not everything is smooth sailing. There are still risks on the horizon. US Treasury yields and concern around government bonds remain a wild card. Any turbulence there could spill over into crypto markets. Potential intervention by the Fed or Bank of Japan, especially if bond volatility spikes, it could add to market uncertainty. Retail investor sentiment is still cautious. Many are staying on the sidelines waiting for clearer signals before jumping in. So, yeah, the macro backdrop is supportive but not bulletproof. The question is, will these forces keep fueling Bitcoin's climb or trigger a pause or correction? Next up, retail interest. Despite the new all-time highs, retail traders are still showing restraint. Funding rates are calm, not overheated, no signs of panic buying or FOMO-driven craziness. Smaller retail orders remain flat or even slightly declining. This means that the current rally isn't being driven by impulsive retail buying, but rather by bigger institutional players and wealth quietly accumulating. But why does this matter? Because a retail-driven rally often ends in a blow-off top and sharp corrections, and a well-led, steady accumulation tends to suggest a more sustainable price increase. Now, what about altcoins? Here's the interesting part. Altcoins haven't really joined the party yet. Many haven't even reclaimed their previous highs from late 2024. This shows retail enthusiasm for altcoins is still low. But if Bitcoin can hold its new highs and start to consolidate, this could be the green light for altcoins to finally catch up, potentially triggering an altcoin season. In fact, some are claiming the altcoin season could start this month. Historically, altcoin seasons tend to kick off roughly 380 days after the Bitcoin halving. And according to that pattern, we might see it begin around the May 25th boundary this year. There's even talk that the altcoin market cap could reach as high as 15 trillion USD in this cycle. I often recommend balancing your portfolio, half in Bitcoin for stability and growth potential, and half in carefully selected altcoins with strong fundamentals and growth prospects. If you're thinking about altcoins, now might be the time to start building that basket ahead of a possible rally. So, where does that leave us? Bitcoin just made history, again, breaking through 111k. Whales are clearly in control, macro tailwinds are strong, and institutions are quietly stacking. Retail is still on the sidelines, watching, second-guessing, but there is no place for small fries in this game. And altcoins, they are warming up, waiting for their cue. What happens next is everything. If Bitcoin can break clean through 112k with real volume, momentum, and conviction, we could be looking at the start of the next explosive leg. But if the bulls sleep and sellers take control, expect a shakeout. Maybe sideways chop, maybe even a classic bull trap, just enough to cool the hype and reset the board. Either way, this moment matters. It's not just noise, it's the market writing the next chapter of the cycle. I'm Neil, and I will be right here tracking it with you. So, stay sharp, stay informed, stay ready, and I will see you in the next one.